Welcome to Power Charting. I'm Bruce Frazier, your host, and we're going to take some time today and go back over some prior trades, case studies that we want to bring current and also can help us to bring together the attributes of the Wyckoff methodology. So let's do that. This episode was recorded on September 12th. For original broadcast September 13th and thereafter. So let's get started. First, we have to look at this great cartoon, great etching, drawing, savage stock going up. So you can see these bulls are chasing this market person up to the top of the peak. And so is that what's going on now? Let's take a look and see, but this is a great cartoon. First, an announcement. This is actually going to be tomorrow on Saturday, and it is the TSAA SF annual conference. If you are anywhere in the Bay Area, please attend. It's going to be a lot of fun. 8 to 5 includes lunch. You get a special rate if you use discount code PRUDENT, and the rate is only $125 with that code. Also, Wycoff market discussion. Roman Bogomazov and I hold the Wycoff market discussions every Wednesday at 3 p.m. Pacific time. And this is it's an event. It's just a great time for Wycoffians. And we focus on a number of different important attributes or ideas for Wycoffians, including trade mastery, better trade selection, better entry, campaign strategies, trading mastery through repetition and refinement. And we are going to have a special 3 for 30 where you can, for $30, attend 3 episodes starting with September 25th, October 2nd, and October 9th. So join us. So go to wycoffanalytics.com and sign up for that, and that is available now. Okay, today's agenda. You can see here that we are going to start with the current market charts, which is something that we do each week that we're together. If we have guests, then we defer to them. But we're going to look at the Dow Jones Industrial Average, an intraday case study that we've been following for a while. We're going to take a look at the transports, and we're going to look at FedEx as a member of the transport index. The other thing is we're going to look at a prior case study of semiconductors, bring it up to date, look at the GDX, which is the gold miners index. We're going to look at the energy stocks through the XLE sector fund, and then 2 other stocks, SHAK and Nike. So we have a busy day ahead of us. First, this is a chart that you've seen in the past. This is the Dow Industrials. This is a 2-hour chart, and this 2-hour chart is, you can see that there was a distribution that formed, and thereafter there was an accumulation that took place. And we had, at the time of this distribution, took the count and said that once this was fulfilled, that we would expect some kind of either a redistribution or an accumulation to form. And it appears that we have what looks like a classic accumulation. Climax, series of secondary tests, higher lows throughout. You can see that the volatility is diminishing from the beginning of the accumulation structure to the end, which is classic accumulation. This is all taking place on a 2-hour time frame, a 2-hour chart. And then over here, we're looking at a point and figure. Here's the distribution count, and look at the beautiful count that it gave down into the middle of the range of accumulation. And thereafter, look at this beautiful point and figure count that has developed that we had indicated was likely accumulation, and we were going to expect higher prices. And so we want to bring this chart up to date. So let's look at what's happened. This is through September 11th. And here we're looking at a 30-minute chart. You can see more detail, but again, the idea is that the volatility on these pullbacks is diminishing, and we have an important sign of strength over here and a last point of support. And so this set up the condition on this good support line for a pivot upwards and out of the range of accumulation. So now what we want to do is take account. And so we're going to take account of this area on this point and figure chart, which we did in the prior example, but bring it up to date. First, I would like to note the action of prices as this accumulation structure is completing, because what you can see here is that on the pullback into the bottom of the range, there is these series of higher lows, but look at the volume. So you can turn on volume on your point and figure charts. And here we're looking at a 60-minute point and figure and 3-box reversal. And what I did is I used standard scale. I used scaling of 50 points. And this is a convenience to do this because you can see how even the scaling changes are, which helps us in our counting. So notice that there's a very low volume throughout this attempt to go down, showing that supply is effectively drying up. So supply drying up indicates to us that absorption in the accumulation area is complete. And so here we can see an attempt to turn up. Look at the volume here, very low on this test of this low, where the volume is quite low also. And then we have a really nice wall that forms that produces a sign of strength, and then a backup one more time. Volume expands on the backup, and then on that pivot off of that, we have very, very high volume. So that's quite bullish, because this is the bar or the column that propelled the Dow Industrials out of this accumulation range. So we want to take account from here to here. This count is 9 times 3 times 50, or 1,350 points. It takes us to 26,900, which is right here, and that's where we went. And then we have a bigger count that we can take over to here. This is the second segment, and this count takes us up to 21 columns to 3,150. This is the count that has been identified here, 3,150 points, which takes us up to 28,500, which is up here. And then we have a larger count that goes all the way over to here. And this count, the third segment, takes us up 4,650 points. Wow, that's substantial. We're counting these from the low, but anyway, which is right here. So you can also count it from the count line. And so here you can see this takes us up to 30,000. Wow. So all this volatility that formed in here produced these 3 count objectives. So now we are up and out. The other important resistance is up here at the prior highs. So let's keep a very close eye on that and see if we can propel through these prior highs. Now, I've called this the third turning. And so the third turning, and we have talked about this in the past, is this accumulation area, or reaccumulation area, that began at the beginning of 2018. This area right here is what we just analyzed. So the count that we have takes segments across this accumulation or reaccumulation area. And this is the third big pause in the bull market going back to 2009. And so you can actually go back and look at these in prior blogs and power charting episodes that we have done. So here is the counts. So notice this is on the S&P, that we have a count here that goes segment that goes 3620 to 4,000. And this actually confirms this whole count that goes back to 2014 in the, this is what we call the second turning right here. So the second turning, here's the third turning. The second turning has a count that has been fulfilled up to this 2960 level, 3140, and then we have a larger count, the second segment, which goes 3800 to 3980. And so this confirms the count that we have in the first segment along here. So confirming counts, that gives us some confidence about the potential to reach those counts. So we are going to be keeping a very close eye on that. Okay, so now let's turn our attention to the transports, because it appears that we're starting to get some rotation taking place. And this rotation, I believe, indicates that there's the potential for the economy to improve in the months ahead. So as we look out in time, these lower interest rates that we've seen and talked about in prior episodes is going to start to have an effect on the economy in the US and in the world. Also, we can see that the Chinese stocks are starting to act better. So there could be some news or about tariffs, and possibly even if there continues to be tariffs, that those tariffs prove to not be that much of an impact on the domestic and the world economy. So here, let's just take a look at the, this is the ETF of the Dow Jones Transport Index. And so you can see here that this is lagging the Dow Industrials, and the relative strength continues to be soft. But we've had a really good turn here, and this turn has seems to be indicating that the transports might be getting ready to act better or attack the highs. And so let's take a point and figure count, and this count takes us across 11 columns here. This is a segment, and these 11 columns times 3 times 2 give us 66 points of objective from, we're going to count from the 176 low of this area, and this gives us a count that takes us up to 242. So it's up here. So this count right here would take us out of the trading area that we have been in the transport since the beginning of 2018. Then we can take a larger count, and this count goes across 17 columns, and that gives us a 102 points of potential. And so if we take the 102 points, this takes us, if we go from the low here, and we would also want to go from the count line, takes us up to 278. So it takes us higher. And then finally, we have a much bigger count over to here, but we're going to hold off, focus on this segment, and see whether or not the transports can jump out. Then we will revisit this chart and look at the much bigger count potential that's potentially available in the transports. Okay, so here's FedEx, which is an important member of the transport index. And here, a classic distribution structure with a last point of supply here, and then look at the poor failing rally here that just goes into the area of prior support, which is now resistance, and this set off an important decline that has been taking place. And you can see that FedEx has been much weaker since the beginning of 2018 than the transports or the market as a whole, as measured by the industrials and the S&P. So now let's look at this point and figure, because we see what looks to be a potential count across here. So this is this count area here, and then we have a much bigger count that goes out to here. Now, this, we're only going to take one count at this time, and this is 15 columns times 3 box reversal times 2, because that's our scaling, 90 points of potential. So if we take that from the low at 148, it gives us a count up to 238 right here. And so it gets us pretty close to the prior highs. And also we can take the midpoint of this range for our count also, take from the low to the high, and then take the midpoint, which I'm sort of guessing at here, and take that count. But also I want you to keep in mind that this count could grow larger. So it could go up and come back and build a much bigger count for much bigger potential. But there's already a great swing trading count available here that could be even larger, more of a campaign count. So this is pretty interesting, and also gets us to want to go look at the other transportation stocks, because I'm sure that there are a number of them that are acting stronger than FedEx. It's just that FedEx is such an important bellwether. Okay, let's turn our attention to semiconductors. So the semiconductors are really very interesting because this is a long-term campaign. I want to blow this area up so you can see that this is a count area that completed back in 2013, and this count goes all the way over to 2001. So this is a very large point and figure count, and this count has created a large objective, and this large objective has the potential, or indicated at the count line, of a mere 29. So it was 29 right here on the count line, and on the low it was at 12. This was a very difficult period through here for semiconductors and technology in general. So this is the 2001-2002 bear market. And so then we can see that the Semiconductor ETF SMH built a count, built a cause for a move up to 137, 153, which, you know, seems almost impossible when you're taking account of this area, and you look at this and you go, is this even possible to have 125 points of potential in this base? Well, it's the reason we use point and figure, because it gives us an objective way to be able to take these counts and see these objectives. So then we got to 2018, and look what happened. Here we can see that there was a climactic surge, a series of tests with diminishing thrusts, and then a sideways, what looks like distribution, and a breakdown. So this breakdown produced a condition that looked like a downtrend, or the beginning of an important downtrend. But this only reached 114 on the point and figure objective. It did not get to the minimum count of 137, much less 153. So the question becomes, is there more fuel in the tank? So we can see that this is really the first important correction in semiconductors since this big bull market started, and has been going and going and going. Now, I also want to point out that this is a 5-box method, which is really akin to, not quite, but akin to a monthly type chart in using point and figure studies. This is a mixed count, which means that which is traditional standard counting. At 20, anything under 20 is at a half point. Everything over 20 is at 1 point up to 100, and then it goes to 2 points. But here you can see the reason we do two calculations, 12 at a half and 19 at 1 here to get this 125, is because we're using a mixed count. Everything below 20 has to be counted at a half point. Okay, so let's move on. What did in fact happen? Well, here now we're going to a 3-box method over here on the right, but this is the same chart on the left. Well, notice this. This is the distributional formation that we talked about over here. And this distributional formation broke down and then went into a reaccumulation, what we call a stepping stone reaccumulation. And what we're seeking is a confirming count. So this would be a count that would confirm the much larger count from below, in this case 137 to 153. Well, look what happens. We get a confirming count in the SMH using 3-box method, where we count across from the end of the accumulation period when the next column is a breakout of that area. So we count from here over, gives us 19 columns, 19 times 3 times 1, and gives us a count of objective of 57 points. And we add that to the low in the count line. Look what we get: 138, 141. Well, 137 is the low count on this. 153 is higher, much bigger, wider range down here. But notice this. Look at the reaccumulation matching the accumulation count, and then all of a sudden the semiconductor ETF starts to mark up. Now it's up to new highs and appears to be consolidating at the highs and trying to work its way up to this higher count. Now keep in mind this: once we get up to this 138 level, potentially, we have a much bigger count. So we have a count that we could say take across to here. And so there may be a much bigger count potential out in the future for the semiconductors. Semiconductors, I think, are important because many speculators like to trade in the semiconductor space, and when they are acting well, it's generally a support for speculation in the broad market. So I think that this is a bullish tone for the market as a whole. Okay, let's turn our attention to the gold miners. We've talked about them quite a bit. Well, we have a count here, beautiful count. This is a swing trading count, 1-box reversal method and standard scaling. So, well, no, 1-point scaling, because you can see here that everything below 20 is at a point. So we took a count, and what we're trying to do is establish the swing trading potential of this classic looking base in GDX. And so here we can see that this is the last place that GDX pulled back to before it had a big jump up and out of the accumulation area. Now we've taken a count. I tend to be conservative, so we took the count not all the way over to this wall here. We took it to the place where the low was put in. So it went down, 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 went down one more time to the $19 level, and then turned up and showed good demand. So this is really the reason that we choose these points. This point produced the uptrend out of the accumulation area. This place put in the low that resulted in a good demand that created the outer ranges of the accumulation area. So this is where we take our count. 22 times 1 times 1 for the box size or scaling gives us a count to 40 to 43. So recently, now this is as of August 14th, doesn't change the count though. So we would want to watch GDX to see how it acts when it gets up to this 40 to 43 area. Well, the other thing that we want to do, and I am running out of time, is look at the bigger picture. And so here you can see, look at this big distribution area up here. So this distribution area, we want to take account of this area, and we go from the last push up before the breakdown occurs and to the peak. So this peak is where all the selling came in GDX. This is back in 2011. And so we want to take this count. And the thing is about distribution counts is we have to be very careful not to overcount. And so then we have what appears to be a classic accumulation structure down here from 2012 onward. And this is the area that we just counted. 3-box reversal, ATR scaling, which is 1.02. I say it's called user defined, but it's based on the ATR. So here you can see, look at this count, missed it by 1 box, pretty darn good. Okay, and then here we have this very large accumulation area, and we just took a trading count that gave us a count up to 40 to 43. Now we want to take this much larger count. Wow, look at this, 113 to 121. This has me thinking about how big that count was in SMH Semiconductor ETF. And so look at this big count, and we want to see how well, and here's 40 to 43 right there. So we want to see how well this trades up to the smaller count, and then its ability to consolidate there and then work its way up to the counts that would be even higher than this area here. Okay, last, well, we'll get in all we can here. This is the Energy Sector ETF, and I just want to point out something interesting, and that is that there's a 1-box reversal swing trading count in XLE that has in fact been fulfilled here and here. So this decline has produced, this weakness has taken it into its count zone on a swing trading basis. And I think you'll find this count here went up to this area. And now we are building some kind of account. Well, this last week, the energy sector has come to life. And I had mentioned before that I thought that this count was important in this decline, and that we could have some kind of a good turn in energy at some point. Well, it appears to be starting in this rotation that we're seeing. So if we're seeing economic recovery, then we're going to certainly have demands for oil. Now, what I want to do is I'm going to cover these next week. So I do want to do this case study on SHAK, which was an accumulation area that was made, that I talked about in Market Watchers Live on April 4th or thereabouts in 2018. So I want to talk about SHAK, and I want to talk about Nike as case studies. So I, in fact, will do that in the next episode. I will be off next week, so we'll have a rerun. So we'll come back to SHAK in 2 weeks, and also to Nike. And we'll also have some other bonus charts for you. But I think it's really good to go back and review these setups that we have talked about in the past and what they have done since then. And if you want, take some time and look at SHAK and also look at Nike and see what they have done. And then we will put up the point and figure charts that we did at the time and see what occurred since we profiled these. And on that note, thank you so much for being here, and we'll see you in 2 weeks.